While the market is still up around 14.8% year to date, and it's bounced up around 2% in the past month alone, there are still opportunities in this market. And in today's video, we're going to be looking at 3 Dividend King stocks that currently appear to be undervalued. To analyze these stocks, we'll be jumping into my valuation spreadsheets, which you can download on my Patreon page at the link in the description. The first Dividend King we're going to be looking at is actually a company that I have not talked about very often on this channel, and it's actually a real estate investment trust, and that is Federal Realty Investment Trust, stock ticker FRT. They're currently trading at $91.86 per share. Now, this company has a very nice starting dividend yield, currently sitting at 4.67%. We can see over the past year, it's down around 9%, and year to date, down 10.52%. Now, like all 3 companies we're looking at today, this company has been increasing their dividend for over 50 consecutive years. They're currently on 54 consecutive years of dividend growth, which for a real estate investment trust is actually extremely phenomenal. So obviously, the dividend history is a thing of beauty, seeing those dividend increases over the past decade. And if we look at the dividend growth rates, keep in mind, real estate investment trusts typically have lower dividend growth rates, but this one has definitely been declining over time. We can see the 10-year dividend growth rate sitting at around 3.84%. That's decent for a REIT, but the 5 and the 3-year both sitting at around 1.5 and 1%. So the dividend growth, yes, has definitely been slowing down, but keep in mind that dividend yield still sitting at a nice range. Now, when we look at the dividend safety for a real estate investment trust, we actually don't look at the payout ratio. What we need to be looking at is the AFFO payout ratio and the FFO payout ratio. And we can see the AFFO payout ratio sitting right here, forward looking, sitting at around 87.45%. So that's a little bit higher than I typically like to see it for a real estate investment trust. But if we come down here, we can see the FFO payout ratio for forward looking and trailing 12 months, both sitting at around 66%. That is a much healthier range, but that AFFO payout ratio definitely something to keep an eye on. Now, the good news about this company is they did just recently release their latest quarter's earnings report, and if we scroll down, we can see Q3 FFO per share of $1.65 surpassed the $1.62 average analyst estimate, which is a good sign. And we can also see we beat on the top line, total revenue of $286.6 million, beating the estimate of $284.1 million. So that was a nice beat for the company. Now, the question we need to answer is it trading at a good value? So like I mentioned earlier, we need to jump into my real estate investment trust valuation model. We'll be looking at a few different valuations to determine its intrinsic value. And like I mentioned, if you'd like to be able to download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So let's go ahead and come up here and plug in FRT and hit enter, and you can see this data will automatically load in. We've already touched on the dividend data quite a bit, and we can see the 500-day change chart is extremely choppy price movement for this company. So we're looking to see if right now is currently an opportunity. We can see analysts have a target price of around $107 per share, institutional ownership pretty high, and a beta of 1.22, so you will see a little more volatility than normal with this company. Now, the first valuation we'll look at is the AFFO multiples valuation. And essentially what we're doing is we're looking at how the market is valuing companies that are similar in structure. So you can see our comparable companies here. We're looking at the price to AFFO multiple. We take the average and compare to where FRT's price to AFFO is, and we come to an intrinsic value of just $71.41. Actually a little bit below that current trading price, but we need to keep in mind when we look at Dividend Kings, these companies do oftentimes trade at a premium, so that is something to consider. Now, the next valuation we'll look at is the historical price to FFO valuation. Essentially what I'm doing is I'm plugging in the historical price per share, the historical FFO per share, so we can see our historical price to FFO. And if we scroll down here, we can see it's been on a steady decline over the past decade, and on average the price to FFO over the last 10 years has been around 23, and the current price to FFO for the trailing 12 months sitting at 14.15. So basically what that means, compared to where the company has traded at historically, it looks like the company is a little bit undervalued at its current price. Now, the last valuation model we'll look at is the dividend discount model, and essentially it will value a company based on how much they pay out in dividends and how much that dividend is increasing. So I plugged in the company's quarterly dividend payouts over the last few years so we can see those yearly dividend payouts and the yearly dividend increases. All of them have been at around 1%. So with an AFFO payout ratio that's a little bit higher than I typically like to see it, I'm going with a conservative dividend growth rate of just 0.25%. So with a discount rate of 8.5%, we come to a dividend discount model price per share of $158.94, quite a bit above that current trading price. So when we jump over to the output tab, we can see the 2 valuations that we used, AFFO multiples and dividend discount model. Keep in mind the historical price to FFO is not listed there, but we did come to the conclusion that the company was slightly undervalued compared to where it's been historically. So when we average these two together though, we come to an intrinsic value of around $115 a share. So with the current price sitting at around $91.81, with a 10% margin of safety, it looks like the acceptable buy price is around $103 a share, and and with a 20% margin of safety, our acceptable buy price is right at the current trading price, meaning now could be a good time to consider adding this company to your portfolio. The second dividend king we're going to be looking at is Lowe's, stock ticker LOW, trading at $191.67 per share. Now, the current starting yield for this company sitting at around 2.26%. We can see over the past year, they are up slightly around 2.7%, but if we look at them over the past 6 months, down around 7.5%. Now, obviously, looking at the dividend history, they have 60 consecutive years of dividend increases, and really over the past decade, they have seen phenomenal dividend growth. Really impressive to see that much dividend history and continue to have that much growth. In 2013, they were paying out around 16 cents per share every single quarter, but jump forward to now, and they are now paying out $1.10 per share every single quarter. So when we look at these dividend growth rates, I'll scroll down. It's actually pretty phenomenal what they've been able to do. That 3-year dividend growth rate sitting at 24.10%, 5-year sitting at 19.29%, and 10-year sitting at 20.25%. So I do have to say, for a company with 60 consecutive years of dividend growth, this is absolutely unbelievable. This is one of the best compounders over the past decade, in my opinion. So when we look at the dividend safety tab, obviously this is extremely important. For a company like this, I want to look at the cash flow payout ratio. I want to know how much free cash flow are they using to pay out dividends. And it looks like for Lowe's, it's sitting right at around 21%, which is a very healthy range. That's really right where I would like to see it for this company. It leaves plenty of room for them to do things with free cash flow, like pay down debt, which is important for this company right now, but also reinvest back into the business and buy back shares. So let's go ahead and jump into our stock valuation spreadsheet. I'll come up here and plug in LOW and hit enter. And we can see this data will load in. We can see the 300-day change chart, trading at quite a bit lower price than they have been over the past few months. I've already touched on the dividend data. We can see analysts have a target price of $235. Institutional ownership pretty decent at around 76%, and a beta slightly above 1, so you'll see a little more volatility than normal with this company. Now, the first valuation we'll look at is Graham's valuation. This is a valuation model invented by Benjamin Graham to calculate intrinsic value. You can see the first thing we need to do is plug in our earnings per share. We'll then take analyst expectations for a growth rate projection, multiply that by 4.4, which is the average yield on AAA corporate bonds, and then we come to the current yield on AAA corporate bonds, which is Y in this formula, and that is sitting at 5.61. Now, something you need to understand about this is the current yield on AAA corporate bonds is now sitting at the highest number it's been at since 2009, and this plays a key role in valuations for companies, and it's really going to push down the valuation for Lowe's quite a bit along with other companies. For example, just a few years ago, this number was sitting at 3.5, and when that's the case, Lowe's intrinsic value jumps all the way up to $319 per share. But with current market conditions, we come to an intrinsic value of right around $199.24. So again, current yield on AAA corporate bonds really affecting the valuations of a lot of stocks right now. Now, the next valuation we'll look at is the discounted cash flow analysis. Basically, we're projecting how much free cash flow this company will produce in the future. So we need a growth rate projection. So I look at things like historical free cash flow, analyst projections, industry growth, and I'm going with a growth rate of 8% for the future free cash flows for the company. I find the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, and then subtract out the total debt. Now, the total debt is a big concern for a lot of people right now, but like I mentioned earlier, the cash flow payout ratio sitting at around 21% should leave enough free cash flow for this company to really focus on paying down debt, hopefully, while also being able to reinvest back into the business. But after we subtract out total debt, we have equity value, divided by shares outstanding, came to a DCF price per share of around $269. Now, the next valuation we'll look at is the multiples valuation. This is similar to the one we looked at with FRT, but this time we look at the price to earnings multiple, and we come to an intrinsic value of $183.22. Again, I think you could make the argument that some dividend kings trade slightly at a premium in the market, though. Now, the last valuation we'll look at, again, the dividend discount model. We can see really good dividend growth rates over the past few years. We saw phenomenal dividend growth here at 33 and 31%. Moving forward, I'm projecting dividend growth rate of 7%, discount rate of 9%, and we come to a dividend discount model price per share of $235.40. So when we jump over to the output tab, we can see all four valuations used here comes to an intrinsic value of $221 per share. So with a 10% margin of safety, it looks like our acceptable buy price is around $199 per share, and with a 20% margin of safety, acceptable buy price of around $177 per share. So depending on what kind of margin of safety you want to use and what your current goals are for your portfolio, this could be a good time to consider adding Lowe's to your portfolio. The third dividend king we're going to be looking at is Target Corporation, stock ticker TGT, currently trading at $106.51 per share, and trading that price gives them a nice starting dividend yield, currently sitting a little above 4% at 4.01%. Now, this company has been hammered over the past year and a half, over the past year down around 34%, and year to date down 29.82%. And a big concern a lot of people have with this company is they're focusing on politics over profits, which is obviously a huge concern. But let's go ahead and look at them from a historic perspective first. When we look at that dividend history, we can see they have 54 consecutive years of dividend growth. And 10 years ago, they were paying out around 36 cents per share quarterly, and jump forward to now $1.10 per share quarterly. So when we look at the dividend growth rate, it's not quite as good as Lowe's, but still very, very good dividend growth over the past decade. We can see 17.73% over just the past 3 years and around 11.5% for the 5 and 10-year dividend growth rates. So really good dividend growth for Target over the past decade. If we look at the dividend safety, I'll scroll down, you can see the cash flow payout ratio. They're using about 30.5% of their free cash flow to do things like pay out dividends. So again, that's a pretty healthy range for them to be in. The dividend payout ratio, when you look at it through the lens of earnings, sitting a little closer to 60%, which is typically a little higher than I like to see it. But again, I still think they're in a very healthy range overall. So jump back over to the summary tab, and we can see they're trading very close to their 52-week low of around $103 per share. So I need to jump into my stock valuation spreadsheet to see if they're trading at a good value. And you can see I've already plugged in Target right here. We've touched on the dividend metrics, and we can see the 500-day change chart right here. They are trading right at their 52-week low once again. Analysts have a target price of around $145.57. Institutional ownership pretty good at around 81%, and a beta pretty close to 1, so the volatility should follow that pretty closely of the market. So we'll go into our first valuation, which again is Graham's valuation, and you can see the metrics we're plugging in right here. And again, that current yield on AAA corporate bonds, like I mentioned earlier, driving down this valuation, but we come to an intrinsic value of $113.25, pretty close to that current trading price. With the discounted cash flow analysis, you can see free cash flow growth has been lowered a little bit for this company over the past year or so by analysts, and we're going with a growth rate of around 5%. And when we plug in all of our other metrics right here, you can see we come to a discounted cash flow price per share of $153.17, which is actually pretty close to what we saw for analysts' target price. The next valuation we look at is the multiples valuation. You can see our comparables right here. We don't have perfect comparables for Target, but that's probably the best we can do. But the average PE for these companies sitting at around 20.31. So with Target's earnings per share of $7.29, we come to an intrinsic value of $148.07. Again, pretty close to the discounted cash flow analysis and analyst target price. So the last valuation we'll look at the dividend discount model. Again, we've seen good dividend growth from this company over the past few years, and I'm projecting a dividend growth rate of 5.5%. So the discount rate of 8.5%, we come to a dividend discount model price per share of $154.73. So when we jump over to the output tab, we can see the 4 valuations that we used. Graham's at 113, multiples at 148, DCF at 153, and dividend discount model at 154. So these 3 valuation models here, all very close to what we saw for analyst target price. When we average all 4 together, we come to an intrinsic value of $142.31. So with a 10% margin of safety, our acceptable buy price sitting at around 128, and a 20% margin of safety, 113. Now again, I think a huge reason this company is currently undervalued is because a lot of investors have concerns with the management at Target right now. The management currently seems more concerned with political activism than actually growing things like free cash flow per share and the earnings per share of this company. So while the company does look a little bit undervalued, it is hard to feel confident in a company when you don't trust management. But there you go, those are 3 dividend stocks that I currently believe are slightly undervalued. Again, like always, if you'd like to be able to join a community of dividend investors and download all of my spreadsheets, then you can head over to my Patreon page at the link in the description. Seeking Alpha is also running a 7-day free trial at my link in the description, so be sure to check that out. But with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.